Good afternoon. Peter Klein, Chief Investment Officer and co-founder of ALINE Wealth, with you this afternoon as we embark on the second half, the back nine, as they say, of 2021. I welcome your attention this afternoon to go through what we believe is the right roadmap to negotiate the twists and turns of the capital markets over the course of the next 6 months. We'll share with you our strategy as well as our themes. So allow me to share my screen with you and we will proceed. Okay, so as you'll see on the next slide, if it were to come up, and here it is, our strategy, and forgive me for this metaphor, is one that is 1 foot on the gas and 1 foot hovering over the brake. I know that's probably not a great way to drive, but it's probably a pretty good way to invest, at least now. Folks, we believe that the music's going to stop. You know, and it's kind of like it's going to stop, and you can't keep up this sentiment and this level of valuation and debt. And there's a lot of issues out there. But until such time, we want to move ahead because we have a number of themes that we think are exciting and interesting. But we want to protect you. That's what we do at ALINE Wealth. We're fiduciaries, we're stewards, we're protecting our clients while advancing their portfolios. The 5 themes are 4 I's in a V: inflation, international, infrastructure, innovation, and value. So let us proceed and it will give you a briefing on exactly that. So again, as I said, where are we? We're between the inflationary pressures that we see as being more durable and sustainable than the market and believes it to be, coupled on the other hand with innovation and entrepreneurship that we're seeing post-pandemic. And so there's a lot of, sort of tug of war going on there. And we're, very mindful that these could provide opportunities, but also with risks. And so this is the whole reason for the 1 foot hovering over the brake. The more challenging piece for portfolio managers these days is the fact that we don't have our friend, the fixed income market, as a ballast, right? We don't have the interest rates high enough to really get any return on cash or short-term fixed income. And because of that, we're relegated to very low returns on our cost, on our dry powder, which is problematic. But the optionality it affords us and the protection it gives us, remember, cash does not go down, is enough to allow us to utilize it in our portfolios. You'll see in a little bit. So first I is inflation. Folks, you'll see this first slide here from our friends at Horizon Kinetics. 2020 money supply up 24.4%, never even close to that ever before. That's going to have inflationary pressures. I can't see how it can. Here's some inflation statistics, and we had recently CPI that was at 40-year highs. Here's the president's and Congress's spending, a lot of spending out there. What do you think is going to happen with all that spending, all the deficits, as well as the debt that we currently have? Commodities are at 50-year lows. So we think that commodities can be an opportunity to hedge against what we call this inflationary paradigm. And boy, are they overdue. And here you'll see again commodities being in the doghouse for the last 10 years. Only now they've picked up. I think this is the beginning of a trend. The energy and metals companies are also compelling. They're part of that inflation-centric mentality. And here you'll see they're undervalued versus their average. Gold and is the supply of which has become down. A lot of these gold companies, you'll see in a moment, a lot of these gold mining companies have found free cash flow religion. And now they're understanding the importance of not just doing more and more drilling or mining and looking for new mines, but rather understanding the importance of cash flow to shareholders. You'll see here that in 1973-74, and I'm not expecting anything like that inflation-wise, but persistent inflation will have its impact on portfolios. But obviously, having gold mining companies is a good hedge against that. And from my valuation work, they are compelling from a valuation perspective. International. is another one of our themes. This is an interesting slide. You'll see here when you're looking at the entire world, the United States is about 24% of the $90 trillion of GDP around the world. So call that 24%. And yet they have 58% of all the stock market capitalization. So you have 24% of the sort of economy, but 58% of the market cap. A little bit, that's an interesting paradigm there, and one that we could use in our event to our advantage by looking at what's not represented in a high valuation, which would be the non-US. And here you see a large opportunity set of companies to which to go through and look to find opportunities. Here's where the growth will be. This is from the IMF. And you'll see that there's a number of emerging markets countries here where you'll see large GDP growth, and the United States sort of towards the bottom part of that. So we'll see how that all fleshes out, but there's some opportunities here for GDP growth. Infrastructure is another of the eyes. And here I speak about water and water infrastructure, but it's not just water. It's also 5G and civil engineering projects, roads, and of course, bridges and tunnels and the stuff like that. But with respect to water, water main breaks, I mean, this infrastructure is hundreds of years old in some places. The EPA estimates over $644 billion is needed over the next 20 years. We've seen numbers as high as $13 trillion globally over the next 25 years. So there's a lot of capital that it's going to need to be spent on the water sector. And here's another slide to show you more about that. Be sure to watch our water portfolio, the case for water, on our website. We go into more depth, excuse the pun, more depth on the water sector there. Okay, innovation. And this is a host of different things. Many folks are calling it the fourth industrial revolution. 5G, cybersecurity, Internet of Things, connectivity, machines doing the job of people, robotics, very exciting. And you need to look carefully in those spaces for opportunities because they're often highly valued, so you need to be careful. But what exciting time there is. And then you get into the medicine, and you get into the biology, genomics, and personalized medicine, healthcare, and technology. Folks, I believe we are in the golden age of medicine, the golden age of biology. Think of what just happened last year. In 11 months, we were able to get a vaccine for a pandemic. I mean, amazing, and so this is a very exciting time. The intersection of the speed of computer technology with the human genome as the guide allows these companies to iterate drug candidates so much quicker and more efficiently than ever before. And it's very interesting what's going to happen in gene therapy and cell therapy going forward. Very exciting times. I'm hopeful that we're going to see disease after disease after disease just checked off the list. It's going to take time. I mean, I'm not naive to think it'll be overnight, but this is the beginning of what we think will be a very exciting time for innovation, especially in the genomic area. And the last piece of the 5-step thesis is value. And here you'll see a graph that shows you the large runway of appreciation that happened in the late 90s with value when the growth market sort of fell out of bed and value took over. We think that's beginning. It has begun, and we think it's going to continue for some time to come. It doesn't mean you can't have growth. It just means you have to be more careful about what prices you pay for that growth and look towards having an overweight towards value as an opportunity to appreciate. And when you say value, you think of Warren Buffett, think about the margin of safety, right? That's how we operate here at Align Wealth. We're not gunslingers. Our job is not to sort of hit home run after home run. Our job is to compound money over time within your investment policy statement without impeding upon your risk constraints. That's our job. So that we provide you with the counsel to develop your comprehensive wealth management plan. So that's the thesis, right? The 5 steps. And now the portfolio, drum roll, please. From a 30,000-foot view, an asset allocation, asset class perspective, you could see here that we've got about 17 or so percent in dry powder, perhaps some inflation protected notes as well. And, we have some gold and as inflation, we've got financials as value, we've got some infrastructure in here. This covers the 5 points we made earlier. And if you want more details and you want to discuss this in greater detail, please reach out to us, give us a call, send us an email. We welcome chatting with you and discussing this in greater detail. Thanks for your attention today. Really appreciate it. By all means, reach out to us if we could be of any help. Have a good day.